All right. Hello, internet.
Hey.
I will let me also people complain if I don't tweet the YouTube link, so I will
Oh, totally.
tweet the view.
In fact, so it's your YouTube. Is that like youtube.com/zmanian?
Probably.
Probably.
I'll tell. I'm going to telegram you the link right now.
Oh, sweet. Thank you.
So that's the YouTube,
Perfect.
and let me tweet that.
All right. I'm tweeted too.
All right. Okay.
Yeah.
Yeah. So So context.
Totally.
This will get recorded. Is like
Yep.
so. Some discussion has happened about the fact that Alameda made a $3.75 million investment in Sommelier over the course of multiple rounds. Um, I will want to talk about how I thought about that. You had some questions. I've also been making some points about predatory tokenomics in the Cosmos ecosystem relative to osmosis gauges, which I wanted to talk about. Uh,
I do too,
yeah,
actually.
I think there's and we can talk. I want to talk. But how are you?
Dude, I'm good. I mean, it's crazy, right? Like all sorts of the cosmos is we, you know, if Jack is right on his DPS theory, we're gonna head to ATH soon across, many chains. Um, and interestingly, I kind of do think he's right. Maybe not in a direct sense, but like in some abstract sense, because our governance system makes an incredible amount of signal. But I guess today we're kind of talking like statecraft.
Yeah.
Yeah.
Okay. So I don't know. I would say
Mhm.
okay. So like here's kind of where I am on FTX, but I want to talk about like why we took their money, what was my theory, like
Sure, go for it, because you know what? I don't
yeah,
have any direct
and like
connections to them,
yeah. I
so
mean I
kick it
don't know,
off.
and so I also want to make clear. I think I've met Sam like I don't think we ever met in person. I
Hmm.
think we did like one Zoom call together in the last 2 years, and like we're in a bunch of group and we're in some group chats together, right?
Right. Yep. Yep.
And like no one else on the exec team at Alameda have I ever really interacted with. The
Gotcha.
people I interacted with were, on the trading desks and, who made and like, made investments. It's a very small investment for them. Didn't really need high level approval or anything. It was not a big deal. Uh,
Yep.
it is, uh, um, it is sort of a thing that our name is splattered all over their balance sheets, but it is what it is.
Well, yeah, and they invested in a lot of
Yeah.
projects. Yeah.
Okay. Can I tell you what I've been trying to figure this out? Okay.
Okay. Yeah,
Which
no,
is
I'd love to hear your opinion.
okay. So a couple of things. Which is first, we can like pop the stack back up to like why I thought they took money because it's not great for like what we were trying to do. That all of this has turned out to be bullshit. Like, I did view them as valuable as a partner. In like what we were trying to do with Sommelier, and it's like so I'll tell, but like macro, here's been my theory. Like, here's my theory. I tweeted this earlier today, but okay. So 2019 was a really late in the game to start a cryptocurrency exchange, right? Right.
Yeah, definitely.
Like, you know, most people would have been like, yeah, you missed the boat. Like, basically, if you wanted to start a cryptocurrency exchange, probably 2017 was the end of the road, right? Like, if you missed starting an exchange in 2017, probably aren't going to start a successful exchange since. there's too much lock-in, there's too much distribution effects, all of this stuff.
Yep.
And so FTX got started, and the mythology of FTX, which was told to me by n number of people, as was, hey, like BitMEX was the super predatory place.
It was the same story I was told.
Yeah. Okay.
Yeah.
Then Binance came up with perps, started doing perps too, as kind of BitMEX faded away because of their regulatory issues. And but BitMEX was also shit for traders, right? It was just it was just transferring money basically to Arthur Hayes and crew.
Weird. I'll just say I have a friend also from my hometown. Didn't know Arthur or anything. Did insanely well trading on BitMEX really routinely. So traditionally, I've been a defender.
Some people did well. I think in aggregate,
Yeah, I believe that.
And so
I've read the reports.
So these the story of Alameda is, and FTX was, we were their social proof for everything was we led the BitMEX leaderboard in 2018, right? And that was kind of viewed as an unfalsifiable fact. It's unclear if it was actually falsifiable. I haven't really heard a story there, but that was the story, right? That they were hey, we led the BitMEX leaderboard, therefore we know how this stuff works really well. We have unique technical insight. And so they were hey, we invented a better liquidation engine. We tried to get Binance to adopt it. They didn't. So instead we decided to start an exchange. They invested in us.
And you're well positioned to evaluate stuff like that. So you think that they probably did invent a better liquidation engine?
No, this is the problem.
No?
This is what I'm unconvinced of right now. The social proof for our liquidation engine is better was two things. One is that they were the leader on the BitMEX leaderboard for many months, if not a year, right? That they were and then that was okay, these people are trading very profitably. That was okay. Second, Jane Street background, typically a place that hires very top tier talent. Do you know very much about Jane Street?
Actually, I don't. I was about to ask.
Okay. So Jane Street is this trading firm that does various forms of trading all over the place. They're very famous for their use of OCaml, to the point in which they have become, they are basically a trading firm that is also a core maintainer of the OCaml language.
That's very interesting. Actually.
Isn't that weird? It's real weird. And they recruit super heavily out of elite US and European technical schools.
Okay.
Right? The absolute best, if you think of maybe the FANG companies getting the top, this is a tier above that, right? Super mathy, super computer sciencey people would do Jane Street
with very, very high early offers and stuff like that.
Yeah. And Jane Street has been beating the market. They've been, beating the market for 20 years.
Now, are they they're a quant firm? So they're profiling their strategy? Okay.
Nobody really knows exactly what they do. I mean, is the question. Is the
right.
Whole thing,
Yeah.
Right. The full scope of what they do is very confidential. Right.
Yeah.
They're Renaissance or any of these. It's weird because they do have this public face because of they're D Shaw or Renaissance or anything. It's their fingers are everywhere. They make lots of money. They have this weird nerdy public profile though because of their involvement in this somewhat esoteric French programming language.
That it really is a somewhat esoteric language. That was a real big.
I hate it. Mina and Tezos are written in it, and it's and I'm friends with Arthur and and I'm an advisor to Mina, and I used to write Haskell, and so I was I can this OCaml thing is very similar to Haskell, but like everything is like in one giant global namespace, and there's not really like imports, and it's like you can't even really understand the code without like the text editor plugin to like resolve where symbol names are coming from, and like drives me.
Okay.
Anyway,
I'll comment. I tried to learn how to write contracts for Tezos at some point, and didn't go good.
Yeah. I forget what that language Arthur made up is. But
Mickelson.
Yeah.
And
It's like
Mickelson
it's like really
talk
hostile
about
to like fluents. But
Mickelson is Haskell. I see. So I have written some Haskell, but I failed with Mickelson. Mickelson was just hard. Yeah.
So okay, so came from James. So these were like the proof points, right? Is like, hey, like, and like, one of the people, the smart contract engineering team at SOM is actually ex BitMEX.
Okay, nice.
And so and it's like, did BitMEX have like super mathy, like high performance, like software engineering, like correlation matrixy oriented people? Not really. I mean, and like Binance doesn't really have those people either. And so it was like very plausible.
So they were using those associations.
It was very plausible that like some kid could come out of Jane Street, like trade on BitMEX for a year, be like, oh, I'm like really starting to get this, and be like, oh, I've like built a better liquidation system. But the only real way to explain a $10 billion asset hole, because okay, so this is the other thing that like I could explain, which is like I've been talking to Alameda for the last 2 years on a somewhat, I have like active chats with them. I've talked about like how DEXs are designed,
they invested in some.
Yeah, but even before they invested in SOM, I traders there and stuff like that I would talk to. It was super interesting stuff. And they would tell me like about trades that they did. And it was like, some of it was predatory, but like it was also pretty low risk. It's like, you like borrowed a bunch of money and like went into this like Solana token farm that like, was kind of bullshit, but like, we like, locked up a bunch of stable coins and like minted a bunch of stuff and like sold them on the exchange to people who wanted to speculate. Like, okay, cool. Like, I don't see how you don't lose billions of dollars doing that. You make money.
Right.
Or actually, like, it's
I
like,
have a big question about that as well. We
issued $30 billion of Tether on Tron and got a 5 basis point discount from Justin Sun. And so we got 5 basis points on 30 billion. And I'm like, that sounds like a great business.
Okay.
Right?
Yeah.
Like you immediately sell it. Like you're holding that. It's not like they held the 30 billion for,
right.
Because
like there's demand for that Tether. And there you go. Yeah.
These are the kinds of businesses this is the kind of thing that they told me they were doing, and they were doing at scale. And I'm like, yeah, is it great to be like levered on like illiquid Solana coins and like not, but like this is not the kind of business in which you like lose the principal easily.
Right. Because in fact, the plays that you described to me just now, you're not likely to lose the initial investment.
Yes.
Hell, that Tether play onto Tron, that makes a ton of sense.
Yeah. I mean, like worst case scenario, you lose like 1% or something like that. It's not like, and like you run a cryptocurrency exchange and you raise $2 billion in equity, and like all of this. So it all made sense to me. But like when you now say we are $9 billion in the hole,
right? Yes, and then you're like, billion?
And like maybe we hold $1 billion of illiquid stuff like SOM tokens and stuff like that. Okay, and then like everything else is coins we made up. FTT.
The stuff that's actually on their balance sheet is stuff like SOM.
So if it's like $1 billion, it's like
that 900 million they said they had.
So it was like 600 million. So it was like 600 million of like ETH, USD stable coins, that kind of stuff. of which a lot of it apparently is stolen now, right?
Oh, I mean,
Yeah.
I,
Whatever's going on with that is going on.
have you seen the graph of the attack? The transactions from the attack. Oh my God, it was crazy.
I
So
have
imagine.
not seen this graph, but it's
Okay.
so anyways, okay. So there's that. And then there's like we own like then we have like marked at 3 billion like FTT and Serum and stuff like. But you didn't pay money. You didn't pay $3 billion to get that $3 billion.
Yeah, it's
nothing.
Yep. That's
okay.
right.
So then you're like, so then you're also like, and then they own like Aptos and Sui and Sparkware and like all these
I didn't know that Aptos and Sui. Oh, they were investors in Aptos and Sui.
Yeah,
they
own like massive amounts of these tokens, right?
Okay.
Yep. And Solana and stuff like that, and that adds up to like $1 to $2 billion ish. Okay, and some of that stuff costs real money. So like, okay, like money like left. None of this explains. Like, there's like $8 billion that like don't make any sense. Like, where did these $8 billion go?
Did you see the tweet on the $8 billion? Because it was real weird.
No.
Serum.
Okay.
They, in their accounting, apparently said that they had 8 billion of Serum with a current market cap of 88 million.
It's 2 billion. It's 2 billion of Serum. That Serum has a circulating supply of 88 million.
Oh,
but like that doesn't explain where you lost $8 billion.
Well, no. In their accounting somewhere, okay, their stake in Serum was counted as that 8 billion.
Yeah, but even if it was, it
would be horrifically irresponsible.
Even if it was, you're still missing like $8 billion of customer deposits that came in. I mean, yeah. Wait. There's a multi-billion-dollar inflow,
$8 billion of deposits that they're missing.
Yeah. There's what is theoretically missing, or like what is there's an $8 billion mismatch between what they were showing on people's accounts balances on FTX and what they actually have.
It's worse than I knew.
Yeah.
I'm going to jump into like one other topic because I am convinced on a certain point. Now, let me just say before I get into this that Terra, it definitely had a design problem. I mean, I think it's very easy to agree on because no matter the attack, if it was designed right, or maybe it's impossible to design that right, this is debatable. But like, obviously there's some fault on the Terra side for the Terra crash because it was being promoted as something much safer than it actually was. However, I mean, it seems to me that FTX actually led dismantling Terra, and that seems to me to be really unethical. But then again, so is
so $8
billion of other people's money.
So things are weird. Right? Like one is so like you have this multi-billion-dollar mismatch between what balances you're showing to users and what you actually have. Okay.
Yep.
And you don't get to $8 billion in this space of mismatch like in like a month or two. Like this had to be
you're right.
The whole 2 years. Like the last 2 years you can grow that.
Oh, but you know what took billions of dollars was attacking Terra. But that should have been a very profitable attack.
But like
200 million, you think?
Yeah.
I came up with a figure in the billions when I modeled it, but
so what happened was, so there was an initial outflow of capital that then triggered a lot more money being like, oh, we've been monitoring the liquidity available to exit UST, saw it fall dramatically, and then we're like, everything else is out, right?
Right.
So that's how you get to the billions of dollars to break it. Yes, it took billions of
Wow.
dollars to break it, but it wasn't the attack only needed to like start the avalanche was only.
Right, because you needed to break confidence in the system.
But it was like I could see doing like your $8 billion, maybe a smaller number than maybe $4 billion in the hole. And you're like, hey, like how can we make it all back in one trade? Okay, why don't we like short Luna and then like blow it up and then like
Right.
that'll be our we'll make it all back in one trade.
So this 8 billion. I mean, actually, Zucky, I'm really glad we are doing this because I wasn't aware that there was just an $8 billion black hole. I mean, I can't imagine. Suppose you're trying to run an honest exchange and you end up having an $8 billion black hole. That ought to be impossible. So then there's this really dark question just of like, where in the hell? Like the middle steps. Do you know anything about the middle
steps? So the
steps?
only thing that I've been, it's been driving me insane for the last like 3 days. Like,
yeah, I bet.
Like for like 2 days, I like just like, it's just like, what the hell happened? Like none of this makes any sense. The only thing I can come up with is that like this matching engine thing that they're claiming like never worked. And Alameda was just bleeding cash on day-to-day volatility on like the day-to-day volatility of FTX. Like the day-to-day volatility
accounted for it outside of that internal system.
Yeah.
And that's how the divergence between so then what that means is that there's some ARB player or many ARB players, who are the beneficiaries of that. Because the assets should not just disappear. That's nuts, man.
Yeah.
He really did give it all away, didn't he?
Maybe it all went into Jump. I don't know.
Yeah.
Like the rumor is that Jump has is doing like during this bull market was making like $5 to $6 billion a year off of their crypto business. And that's always also seemed weird to me that they were like making so much money. It was like,
you want to talk about Jump? Because I have look, we're vibing here. Yeah. Well, what I've heard about Jump is that Jump managed to, hold tons and tons of Luna, tons of UST, and make money from the crash. The combination of those three things is very weird. And Jump. Well, I only hear weird things about Jump, actually. Like historically speaking, when I hear about Jump at all, it's in the context of something, that's unusual. But so one possibility you're saying is that Jump's outsized profits actually came from manipulating FTX.
I don't know, man. I'm just
right. No, that's what I'm not actually
speculating. All I'm saying is it's just like
evidence.
It's like really, it's real weird. It's real weird. Nothing real. Like the only thing that really I think explains what the amount of money that is missing. And now you start understand, but see, so here's kind of this, you see what this thing that they were doing was.
Yep.
And I fell for it, right? Which was they were losing money on the market making business. But because they were losing money on the market making business, a lot of sort of prosumer type and institutional traders started trading on FTX because they're like,
because on average, their outcomes would have been a little bit better.
Exactly.
Yeah. Or a lot better, I suppose.
And so you're like, this is a better, and they have this magic technology, this magic black box of this liquidation engine that they've invented. And, because of it, we're all getting better outcomes and we should all come here, which then keeps the equity value of FTX going up because now everyone, a lot of people, you get a lot of social proof from, sophisticated trading firms who are like, we love trading on FTX. Like, this is amazing. okay, equity investor, go, happy to
Yeah,
put.
because they hear it from all their friends. They hear it from the pro users. Yeah, I mean, that actually makes sense because that is
And then
what
you're just like
drives.
cycling this back.
Yep.
And then, there are all these rumors about like, oh, as they were trying to buy Voyager and BlockFi and all this stuff, they were just trying to incorporate their deposits into this system. And then, and then they were doing, you have been expressing these concerns about the Democratic Party, and which we can
Yeah.
talk about. But so I just like want to like
Actually, you
finish
want to
the,
jump right into that?
or like kind of get to like why Sommelier engaged with them, right?
Yeah. Okay.
And it's like, so we're making a system that like the whole point of the Sommelier system is it can't rug you, right? The balance sheets are all on the balance sheet of the system is all on Ethereum. Like even if the Sommelier validators, or hold on, Ethan is texting.
That's all right. No worries.
We're just doing live streams today. It's a live streaming Sunday.
Well, yeah, I believe that. It's been nuts.
So what I was so what I was trying to say was but like Alameda had a reputation of being like a really sophisticated market maker, a really like more aggressive on the regulatory side, and like an exchange that like listed things that are good for pro users. And if you think about the kinds of assets that Sommelier is making, like we are making these assets that have trading strategies built into the asset and that execute and have been executing really reasonably well and all under these market conditions, which is cool.
Yeah, so everything you heard actually fit with your model for Sommelier.
Exactly.
Yeah, I can see that actually.
And it's all like, I mean, it's like, I had exactly the same intelligence as everyone else. It was like, you talk to all of these people and it's like, yeah, we trade on FTX. It's way better. We make way more money trading on FTX than we do on Binance. We like trading there better. And then Alameda is like, what kind of trades do you do?
Whether
And I was like,
intentional or not, if you tweaked stuff like the liquidation engine to be a little more forgiving, people's average profits would be larger. Like that's very interesting.
So anyways, that's a bit of the story. And like, it's unfortunate.
Good story, man.
It's
That's
unfortunate.
quality.
But like,
It is.
yeah, I mean, so I also, so this, it is, on one hand, it's like we were finally really ready to work with Alameda and FTX, like technically, because like now all the pieces are together in the last couple of weeks. And we were like really like actually, talking to them a lot about listing SOM on FTX and, how Alameda could help with strategy tokens and stuff like that. And obviously all
No
of that.
wonder you have your tinfoil hat on. Wow. So the past few weeks has actually been an acceleration in your discussions with them.
Exactly.
And they said nothing?
And no one, like, I don't think anyone I knew any of this until like very late in the game.
Gotcha.
Like I said, I don't talk to anyone at the exec level.
Right. Yeah, you were talking with the team.
I talk to their listing people and their trading people, and these are the people, and like explain to them what SOM is doing. So like I it could have been a lot worse, right?
That's very true. Had it been a month later, they might have gotten into the strategy tokens or who knows what. And yeah. Well, that's bizarre. Like everything I've heard about FTX recently. I sort of like the theory of possibly because if you think about it, if there was a even a 10 transaction theft of $8 billion, we'd all know. We'd all have seen it. But if it was a design to um, to basically gradually improve the outcomes of traders on the DEX, then I mean, or not DEX, on the exchange, I suppose that the only people who would really know are the ones working on that core exchange code.
Yeah. And like,
Yeah.
I mean,
Um,
I don't, Alameda was always a small team, right? I think their trading team's like 15, 20 people, right? Um,
okay.
it was a very small team, but everyone just had their own little book that they were doing. Like,
Oh, really? They didn't. They didn't have like global. Wow.
yeah, the people who
Okay.
had a global view were like Trabuca, Caroline, Sam, like, it's
Yeah.
like, but it's like any trading firm, right? It's like you don't want to leak alpha.
Yeah. Totally. And all right, now I do want to bring the Democrats into this because it's my belief for years now, that basically their strategy, and what I'm saying is this is a political strategy, not a
Yeah,
governance strategy. But I don't know if you've seen the Democratic think tank documents that are like, wait, conservatives suddenly like cryptocurrency. We've got to ban that. And I think that's very, gutter low, right? Um, I'll declare my political affiliation here. I'm neither a Democrat nor a Republican. My last two presidential election votes were literally John McAfee and Kanye West. I do vote because I think that sort of thing is important. Um, and generally, just like with validation, even I vote my conscience. I don't think about that thing about, oh, you're wasting your vote, right? So I've been a concern of mine as an American and as a cryptocurrency developer and a cryptocurrency entrepreneur and all of that stuff, right? Is bills have been submitted to Congress that basically ban. I mean, no, if certain bills that have been submitted but have not passed and did have wide Democratic sponsorship, notional could never be a thing in the United States, and it might make me a felon. Of course, I'm incredibly opposed to these bills, and I don't know what I would do if one of these things would pass. I also want to say, since we're discussing this stuff, no, I don't believe that notional breaks any U.S. laws. We're really careful not to. We just stopped validating SIF, not because I'm certain that they're breaking the law, but instead because I felt that there was some centralization risks posed by their admin keys. So notional, as a business, we're really careful about that stuff. And I suppose you could just say, bottom line, personally, I'm deeply opposed to just about every Democratic Party sponsored strategy on cryptocurrency that I've seen, and that would include bills that have made it to Congress but have not passed. And so, I said to you off camera just before we hopped on, hey, I think Sam really might have been a plant. Um, and I suppose that, look, what I want to ask you is, do you think Sam might have been a plant? And am I wrong about Democrats and cryptocurrency? Because what I feel is pure hostility to the point of, like, I feel that Gensler and company have actually been lying. Like, they've misstated facts in a very material way in prosecutions, and it's scary as hell.
okay. So I agree with most of this. I think
Mhm.
Democrats have been like the party of a type of fascist control inside the US that became like very clear uh um um that became very clear like during the Snowden era, right? It was like
Yeah.
it's becoming it became increasingly. Now it used to be. Now I wouldn't say like there's also a huge fascist strain to the Republican Party. So I'm like
Oh yeah.
saying
Oh,
there's like
absolutely. That's
a
why I'm
large
neither.
there's a lot of huge amount of fascist strains to both. Like
Yeah. Well, I mean, I
there's an
like
authoritarian
popular
left and there's an
people.
authoritarian right. But
Yep.
like what you are seeing from the Democratic Party relative to cryptocurrency is the authoritarian left asserting control.
Yep. I agree.
And the stuff that we both work on, Cosmos, cryptocurrencies, are systems that are designed to decrease that control.
Yeah, absolutely. I mean, there
And
is a political bent to it. People have at times asked
yeah,
me,
and so
make it less political, and I'm like, oh, there's
I don't know that there's two theories here. One is the plant theory, and I only really ever believe a plant theory. Plants have handlers, right? So if somewhere in the world there's like an SBF handler that is working this whole system, I that would be like what my bar of what a plant is, because it's a lot of things can just be explained as like people who are informed about how things work and sense opportunity,
seeking their best in. Yeah,
right?
just
opportunity. So yes, our SBF's parents like Democratic operative people who are connected in these ways and connected to all of these. Absolutely, both Caroline and SBF are absolutely connected in this way. And do they see an opportunity where they're like, oh, the Democrats want the authoritarian left, let's call it that, wants control over this cryptocurrency thing. There's a game we can play here, right?
Yep.
We can play a game where we really try to become a big deal in cryptocurrency, and then try and we can play this whole game where we lose a whole bunch of money building an exchange, but then get to be the only exchange that is sort of grandfathered in or acceptable to the Democratic Party.
Oh, so you think that the stronger evidence is toward that play, and that's why they were out lobbying and making all of those donations, because they had built this giant exchange, and then they wanted to be the compliant exchange, pushing everybody else out, capturing, a potential CBDC
they were going to get more from a regulatory point of view than Coinbase ever got.
Right.
They were about to sort of be the they were trying to bring perps to the US, which there have never been perps in the US. And because Kraken and Coinbase have never gotten no action relief from the SEC. They're just continuously under investigation forever.
That's true, actually. And that's an interesting point. They've not been. Did FTX ever get a no action letter?
It was there are public meeting minutes of Gensler's meetings about getting FTX no action relief.
Oh wow. Yeah, that would have been. So okay, you feel it's more likely they exploited their affiliations in government, as opposed to
I'm not trying to I'm
well, we're both speculating because we're not
have I ever sensed there's weird there is this layer of opaque conspiratorial weirdness that exists in levels of power in sort of the globe, and you can sense it, you can sort of sense it, but you don't know the shape of it.
So this is how I feel about it as well. This is one of my big differences with Jay. I think it exists. I just don't know what the hell it is. I agree with him on a lot of really weird stuff, but the conclusions are totally different.
Yeah.
You can observe that stuff is occurring, and if you look at it, you can see it's very weird. But I'm really, really
My
I
sense
kind
of
of
all
like
these things is it like there is a bunch of like there are a bunch of there's like layers, like the organizational structure is, yes, there are like I think that there are like discrete bureaucracies, right? There are fixers and networks of people who take care of problems for rich people. There
Yeah.
are circles of people who, invest in each other's businesses and move money around. There
Yep.
are people who manipulate markets. There are people who have large amounts of influence in various government bureaucracies. There are, intelligence agencies. There are law enforcement agencies. I generally like there are all these bureaucracies and they're all wrapped up in each other in various ways. But like, yes, I don't think like I think if you wanted to have like control over like if you wanted like a really coordinated system, you would actually have to have some sort of massive bureaucracy that like I think
Yeah,
obviously
there likely need to be a visible hierarchy.
yeah.
And there's not. That's an
It's like
interesting
more it's like
view
more
of
easy to just
business.
explain this from like opportunism, laziness, greed.
Mm-hmm. It's interesting. Oh, so Osmo gauges.
Yeah, let's talk about that.
May I do my view first? I think it'll
Yeah.
be pretty quick. I think they're great if you're looking to bootstrap an asset. However, I think they're often used really poorly. The most powerful transaction that I've ever made in crypto is actually on Osmosis. It was to take 25 million of 1 billion dig and put that into a gauge over a year. But there was a really conscious decision of how I used that. Um, that 25 million, that's what, 2.5% of supply, I think. Um, and over a year, actually with the intent of renewing it after a year. Honestly, the CLI command for that is crazy complicated. I had to do it a bunch of times to get the dash dash dry run. I'm sure you're familiar with dash dash dry run.
Yeah.
I used dry run a bunch, got it to work right, and in that respect, I like gauges a lot because basically, anybody who's got a liquidity pool with Dig has some incentive from Dig to do that. And then we also applied for the Osmo incentive. I believe it's still active. It might have even been removed by governance. And in either event, this is fine. What I've seen, though, is projects that see either a brand new coin or maybe you've decided you wish to manipulate markets. Well, what we could do is have a nice little short-term gauge and pump the APY on that like crazy. It is so that use case seems like kind of a breeding ground for the weird. I hesitate to say scams because everything is transparent, right? Everybody can see that there's a gauge, it's this much money, it's this much time, or this much asset, I should say, because I keep trying to remember to remind myself that proof of stake tokens are not exactly money, or maybe they're like money plus plus, because they're valuable, but they also carry with them governance rights.
Yeah.
So that's my thought, and basically, like I'm opposed to short-term use of gauges. I view that as a big red flag for projects that list on Osmosis. And on a long-term, like mild basis, I'm pretty supportive. I think it's great, and totally curious to hear what you think, though.
Okay, so here are some things that Sommelier experienced, right? So
Okay.
we did this airdrop to Osmo users as a way of sort of getting, some exposure and some visibility of the token into
Yep.
Cosmos. At the time, we were also planning on kind of going after this Uniswap V3 market and building this Uniswap V3 product that we eventually learned only lost money. I don't know if you've been following the saga of like
Oh no, I didn't know that, but I did know it existed. but I didn't know that you learned that trading those liquidity bands as described would end up only losing money. That's
It only
interesting.
loses money.
Fees?
No, it's basically you have this like outside of outside of certain kinds of assets. So like stable coins, Uni V3, great range liquidity, amazing, great solution, works well. I want to talk a little bit about some of the experiences we've been having with IST with you as well, just because it's just interesting.
I'd love to.
It's related. But so stable, but outside of that use case, you're just the only places to hedge have historically been you needed access to like FTX and Deribit to like profitably hedge, both of which are basically not doing great now. And so so like what we learned about that was, and so we shifted our thing to these strategy tokens, which I think are a much better asset and a much better thing. And like yield vaults, yield tokens, strategy tokens that like represent either like actively managed strategies or like somewhat less arranged, actively managed strategies. I think they're a much more unique and differentiated project. And I think, mostly they'll make money and they'll like sort of make money if like, things are relatively flat, and they can make a lot of money in a bull market. For everyone involved. The questions that are but one of the experience Sommelier had is, so we did this airdrop and like people made the swap, and we opened up the IBC connection, and then there was some weird stuff going on with people trading the airdrop, and basically it like recursively interacted with the Osmosis automatic incentives at the time, and like caused this like 1,000%
Did you end up getting a pump from that?
And then it pumped the token to $6, like insanity.
Yep.
Right. And it was like there's nothing we could do. We were like, we don't have any control.
I mean, that's correct. When they
and but like imagine if I had been unethical, right?
Yeah, right.
Imagine if I had been unethical during that pump. The foundation, me personally, I mean, fortunately, one of the things that we did is like I wanted to do this while everyone was still illiquid. So like I was everyone was still investing contracts, right? So like there was no one on the inside who could trade it. The only people who had liquid tokens were the foundation, and we're not going to do that, right?
Yep.
But like imagine a more adversarial person in that situation.
Well, I mean, I think we've seen it happen,
and we've seen it happen, right? Yeah. A more adversarial person could have come in, put him, and just dumped, millions and tens of millions of dollars of foundation tokens in the pool, and been like, okay, like I fucked over everyone, but
right, exactly. You do. I'm not going to name names.
And it's like right now the state of the play is like I think you see this with like the Optimism airdrop. You see this with you see this with Cosmos coins, where you can use a combination of liquidity incentives and airdrops to create an artificial pump in your coin, and then monetize the hell out of it against retail.
I mean, yes, absolutely.
Right. But one of the things that but like on the flip side, I think these gauges are very ethical products against applications rather than the governance token of the chain. So for Agoric, I've been very supportive of like build incentives for like the Osmo IST pair for like those are online right now. Next week we're going to have
that's very interesting.
Incentives for stable coins on Crescent. That's going to go online.
Okay.
Right? And this is
Osmo and IST can actually earn build. That's in play.
It's running right now.
All right. No, I mean that's very interesting because
you're essentially paying people for the impermanent loss. right?
Mhm.
But you're also like you're compensating people for the impermanent loss, but you're also bootstrapping IST into the IBC economy. You know, it's been interesting watching people. You know, there's been interesting arb. Also, someone just like you. So like, uh, 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 the PSM is like a stable swap right now between like 4 coins, like Axor, USDC and Tether, and Gravity USDC and Tether. And there was like a massive arb of that stable swap because it's all 1 for 1. And when Tether like mildly depegged,
Yeah, the
like someone like
97.5 the other day.
people just like brought all their Tether over, got all this USDC out, and like so like now the whole thing is unbalanced.
And is that like quad pool you just described? Is that on Osmosis or
No, it's on the Agoric chain.
on Agoric? Okay.
Yeah, it's like running on the Agoric chain.
Where's the website to play with Agoric?
psm.inter.trade.
psm.inter.trade. Okay.
They have
that.
there's
nothing
they have an interesting security model that is unfamiliar to people inside of Cosmos,
Okay.
which is you go to psm.inter.trade. Okay, so here's what's going to happen when you go to it. I just like no, I haven't had an opportunity to explain this on any chat recently, so I'm gonna knock this out. Okay, you go to psm.inter.trade. It'll prompt you to go to this wallet.agoric.com, I believe is the website. And then it's going to cost you 10 build to create what is called a smart wallet, which is like a piece of on-chain state on Agoric, which is why it costs money because like you need to have because it if
is
you
this
get
like
a
a smart contract wallet on Ethereum? Are we in an analogous space or?
Yeah, it's like a smart contract wallet on Ethereum, exactly. And then wallet.agoric.trade is actually your UI for that state. And then psm.agoric, you actually like, so you have to like, it gives you the transaction that you're going to do, like your swap. Then it pops up on your wallet.agoric.trade website. And then you sign with Kepler from there.
Okay. And the transactions that I'm signing with Kepler, they actually they're sort of like all integrated, they're all hitting that smart contract wallet.
Yeah.
And then interacting with other contracts on Agoric. Is that about right?
And there's yeah, exactly.
Yeah.
And
okay. Cool.
There's a security boundary that's nice here because you don't actually have to trust psm.inter.trade to do anything, because it's going to say, oh, you want to swap USDC for IST, and like you're going to get in, or like you're going to enter in this vault and all this other functionality. It'll actually show up on the wallet.agoric.com website, and like you'll also get a JSON blob that isn't as readable as you would like on your ledger. But like even if you're not using a ledger, you get this like increased trust and security thing that like basically no other platform has. It's like real cool that it works.
So I'm going to play with that either tonight before going to bed or tomorrow, because it's I don't know where you are time zone wise, but it's already.
I'm in New York. I was in London like yesterday.
Oh, you're in New York? Oh, I didn't know that. Well, that's cool. I'm hoping to do a proper U.S. tour next year.
Have you used Axor's like satellite product as well?
Actually, no.
It's like really like an easy bridge from Strangelove, which is another UI on top of it, an alternate UI for Axor. But honestly, like, so I was trying to get all this stuff set up, and it was like I had to go. So first time I used it, I took some USDC from Ethereum, bridged it over Axor to Agoric. Good user experience. The only thing that's really annoying is that it takes like 10 minutes to get finality on Ethereum right now, which is just like so.
Okay, and that's
but then
to get finality from Axelar, right?
From Ethereum. If Axelar will not finalize its transaction until Ethereum.
I have so many questions about ETH proof of stake. Can we do another chat about that?
Yeah, well, we can do another chat.
Hey, cool. Because did you see my hand waving there? No, seriously, I'm very confused about.
I can tell you how it works, and I can build you an intuition for how it works, but it's weird.
Good.
Everything is Tendermint with extra steps, but you just have to understand the extra steps.
Well, that's true. Wait, didn't they, or did they not? They didn't, did they? At one point, they had announced that they were moving to a full finality model.
They do.
But it,
They have full finality now after 20 minutes.
oh, okay, got it. Okay,
Or it's like 12 minutes or something like this.
and that's the wait that you're describing.
Yeah. So so Axor like makes you wait for the full finality time.
You're right.
And then it would be like, so and then another time I wanted more, and then someone else they started out with relatively low debt limits on IST, and so I like bridged my USDC over because I needed some more IST, and then I like get there, and I'm like, oh, like the minting limit on USD, so then I had to like go all the way back to Ethereum, swap for Tether, and then like go all the way back to IST to get my IST.
Swap back out to Ethereum, swap Tether. You brought the Tether back over.
I brought the Tether back over
and purchased IST.
And then,
is that right?
Yeah.
Okay.
Minted IST against it.
Minted IST against it.
Yeah.
So if I have Tether, I can create new IST.
Yep.
Neat. What else can I use to create new IST?
Just USDC and Tether right now.
Okay, so like basically the pieces for dealing with greater volatility aren't in place. So
yeah, so you have to ship a lot of pieces to deal with vaults. So we have to ship a liquidation mechanism. The original plan was to ship an AMM as the like a DEX, an AMM, automated market maker, as the liquidation mechanism.
Yep.
But like, I don't know. I don't feel like it's a good use of, like, frankly, like the DCF, the Decentralized Cooperation Foundation, Agorix Foundation resources, or really anybody else's time trying to like bootstrap enough liquidity on the DEX that we're like, that like you can meaningfully liquidate against it. So we have there's a bunch of design work going on about a new liquidation mechanism, and then like, so that like is probably a little bit more like the Kujira liquidation mechanism. I don't know if
interesting. I have a question for you.
But the one thing that we're going to do differently is we don't like, one thing that I dislike. So Maker, the way Maker works on its liquidations is you get a new price, which may trigger some liquidations, but then you have 1 hour before the new price goes into effect and the liquidations occur. So then during that 1 hour, people have the opportunity to either pay back or increase their collateral.
Oh, and you think that it should be a continuous process that matches.
Whereas just, Kujira, every block is getting a new price, and then if that price would,
I think that's sensible, actually. Yeah. Anybody who has significant assets in that would create a bot or script to protect them should the liquidation price.
Yeah, I mean, or like you could, like, if it's an hour, you can like call people on the phone to get them to move money.
Yeah, truly.
Right?
That's interesting. I have one quick question, because I bet you probably need to hop up, but like, here's my question. Zaki, all right, thank you so much for being so direct about all the Alameda stuff, even the Democrat stuff. That's super cool. At the end of this call, we got into a lot of really interesting finance stuff. You probably know, my background, I was a history teacher. Yeah. Do you have any recommendations on articles or books to learn more about the techniques, or is the fact of the matter is we're just inventing them out here?
No, it's not. I don't have anything off the top of my head. But like they're like, AMMs existed in the design as like a design for a decade.
Are you talking about something that was often called a gambling pool? Because I've heard them compared.
Yeah. Well, also, so the original was prediction markets. The original like actual use case was prediction markets. People wanted to have a prediction market to and like liquidity on prediction markets is always hard. So this automated market maker idea was like sort of iterated on in these concepts before, Martin Kopelman was really really the person who was like, no, this is perfect for Ethereum. Like this will be awesome.
Wait, Martin Kopelman did that.
So
what product did that result in?
So Martin just used to talk it like Martin was focused on Gnosis and building a prediction market, which never really worked out. And now they're in L1, It's like every single person I was like talking, like really good friends with in 2015 and 2016 has their own L1 now. It's a weird thing.
Well, I believe that building L1s for like, I don't know, some type of really weird troubled brain, it's really expressive.
But yeah, Martin, like I remember, so DevCon 1 was really weird. We were like right in the center of the London financial district in like an old stock exchange or something like that, where they held DevCon 1. It was like super financy. And then there were like all these like banker people in suits, and I didn't want to talk to any of them. And then, but like, I remember just sitting in a corner with Martin and just like talking about DeFi stuff. And like he had so many ideas. And so he was the big automated market makers are a really good idea. Push it. And I believe that there was like a discussion in a comment thread of one of Vitalik's blog posts between Martin and Vitalik. And that was where
then Vitalik wrote the thing out in Python that ended up becoming Uniswap. Okay, I can see that. Yeah, it's interesting. I mean, you've been at it longer than I have, but I've been at it now long enough to see the concepts evolved and to sort of like watch different families of the concepts. It's fun. Was there anything else you wanted to talk about today, man?
No, I hope you felt like
dude, you really did. You really did.
Questions that you asked were very legitimate about. And like, I don't know, I don't feel like I talk about this internally a lot at SOM is like people are like, why don't we do osmosis incentives? And I'm like, there'll be a time and a place where I believe we can move from. And I honestly, if this week hadn't happened, we'd probably be right around there right now. We're like,
right. Well, I imagine that it was a pretty big setback since you said that you were actually in conversations about Alameda to go to the next stage. Sorry about that.
The timing was, well, like I said, knowing what I know now,
it's good that it happened.
It's so good that it happened before you actually exposed user money to FTX. Now, I'm definitely super glad about that. I'm not worried about the security of the protocol because the entire design of Sommelier is that like even if the entire validator set is fully compromised, everybody can get their money out.
That's very interesting. So I don't know. My favorite thing so far about Sommelier is the alignment between validators and users. Obviously, I'm speaking from a validator perspective, but I remember talking to you and Jack about it, and you guys were like, "No, you get nothing unless
users make money."
Yeah, it's good.
I think we should this is what. Well, I mean, we're not going to be able to build Cosmos on, hey, like we're just going to like have the builders extract money from the users forever.
Yeah.
And I get, and I don't know. I've been finding the whole discussion in Adam 2.0 about this is what I'm trying to do. I'm like, no, like I'm happy to like create a world in which we all make money together, but we're all going to need to make sacrifices together too from a startup capital.
Well, I mean that's the reality, Well, cool, man. Thanks a lot. I really learned a lot on this call, and I'll catch you next time.
Yep.
All right. See you, Zaki.
Bye.
Bye.
Hold on. I just need to
here.
broadcast.